Good morning. It's the Ambassador at 9 o'clock on November 11th. Emerging markets trading higher this morning despite a weaker China, down 11 bips. India up 2.5%. South Korea up 80 bips. Taiwan up 98 bips. And in Eastern Europe, where you've got Czech, Poland, and Hungary, Hungary's up 1.6. The other markets up about 50 bips. Russia actually trading down a bit. Down about 8 bips, but flat and coming off, despite the fact that oil is up 1.5%. Turkey, another good performance here. This market had been lagging, up 1.1%. Into South Africa, up 1%. Currency also tighter. Rand continues its move back down, now 7.35, but this tightened all the way in from 7.90 only a couple weeks ago. Looking to Brazil's open, up 98 bips. Market definitely seeing some renewed interest, some capital markets activity, also supporting the index. Chile down 13 bips. There's been some talk that copper imports from China are actually going to be down next year. These comments are actually coming out of Chile's state Codelco, which is the largest copper producer in the world. Overall, looking at the headlines, the big news was China. Industrial production, retail sales, PPI, and loan growth. Big numbers coming out of China. Numbers positive in terms of showing a return to growth, but also the fact that the stimulus is now taking hold in the domestic economy as opposed to just stimulating the commodities market. So the target is the Chinese consumer, the fact that they are beginning to show spending in not only the auto sales that we saw earlier this week, but in small appliances and apparel, tells you that they are finding success and into phase two of their stimulus policy. The loan growth, which had been a big part of the early year run, down dramatically, in fact, surprised to the downside, and continue to expect that they will be cutting back capital to banks, or at least increasing the capital requirements on deposits for banks, but tinkering with their monetary toolbox to bring China under control. Turkey may get a credit upgrade within the next 18 months or so. Moody says, watching the IMF, that's a big catalyst to this market in the short run. And watch for some MSCI inclusions around emerging. You're going to see some of the next wave of the companies we're watching in emerging markets become part of these indices. That will make them required buys by a number of passive investors. Big mutual funds will have to own. Expecting to see some of that in Russia, expecting to see some of that in Brazil. I'm the Ambassador.